Last month, the IMF cut global growth for this year to 3.2% and for next year to 2.7%, which was the slowest growth in 20 years if you exclude the COVID and the Lehman crisis years. The IMF has also cut India's GDP forecast to 6.8% for FY23 current year and to 6.1% next year. But India still stands as a refreshing growth story compared with most other large economies. The question we are asking today is, can India reach the coveted 7% growth in a slowing world with fragmenting trade? To answer this, I have with me an economist who is an expert on both global trade and on India. I have with me Dr. Arvind Panagariya, the Jagdish Bhagwati Professor of Indian Political Economy at Columbia University, and of course, the former and first Vice Chairman of the NITI Aayog. Dr. Panagariya, thank you very much indeed for joining us. Despite you being in India, we have to do this remotely. That's unfortunate. I couldn't come over to Delhi. But the first question really is to understand global trade, since you look at it very closely. Now, the latest salvo coming from the US has been this chip export restrictions to China. Are we headed to an extremely fragmented world trade in the coming decade?
So, Lata, at one level, yes, fragmentation is happening. We saw the trade sanctions imposed by the United States on China, China retaliating. Prior to that, we had those steel tariffs by the United States. Other countries have also done this. So when you look at a micro kind of level, including, of course, the very recent actions that may happen on microchips, so at the micro level, you do see this fragmentation happening. But at the same time, if you look at the aggregate picture, trade has its way of finding, different routes. And just to underline that point, the aggregate exports, the peak prior to the COVID pandemic was about $19 trillion for merchandise exports. This was in the year 2018. Now, 2021 was still kind of continuation of COVID, but already in 2021, the aggregate exports had jumped to $22 trillion.
Okay.
And that trend has continued in the year 2022. Certainly, I've seen the figures for the first quarter of 2022. And there had been some 16% expansion in these exports again. So yes, some bit of fragmentation going on, but determined exporters and determined importers have gone ahead and found their different ways to carry on with the trade, and the overall trade has been actually expanding. So in this sense, I think I'm less worried.
We are starting on an optimistic note in that case. Thank you for that insight, because we only get to hear the noise between countries, yes, but not the underlying peaceful trend. So parts of globalization are not getting reversed. Now let me come to the global growth issue. We've seen Fed tightening and tightening by several other major central banks, ECB, BOE, and China has its own problems. Are we in for some, is this decade going to be a decade of slow global growth?
That, I think, is correct. With that, I concur, because, we have seen phenomenal Chinese growth, and the US has done decently as well. Europe, as usual, has been, not in the same league. And all that, the two big entities, China and the United States, have driven growth at a faster pace in the coming decade. Certainly, China looks set to slow down, and given the fact that it had been growing at 8 to 10%, now this kind of slowdown is going to contribute to the slowdown of the global economy. Also, China, now with $17 trillion GDP, is a major contributor. It's no longer the $4 or $5 trillion economy. So on that count, yes, I think. And then also, the policy measures that are being taken both by Europe and the United States, which is, because of inflation, they're all trying to tighten the monetary markets. Interest rates have been rising. And that certainly, and the Fed in the US certainly is trying its very best to bring out recession so that inflation can be checked. So yes, I think, we will see some slowdown of the global economy. There is no doubt.
Okay. So now to come to the India question. Is it possible for us to maintain or even aspire to a continued 7% growth, at least? I mean, we would ideally like 7 to 8%, but 7% growth in a decade when global growth is slowing?
Yes, so there I'm optimistic. I'm quite optimistic. In fact, you had raised earlier even the issue of 7% growth rate in the current year.
Yes.
My own take actually is that in the current year, we would very likely hit 8%, and between 7 to 8% in the decade to come, I think is in my view, well within our reach. Indeed, it's the likely growth rate to happen.
Okay.
If you'd like me to explain why, both on the current growth rate being likely to be closer to 8%.
So 1 minute. Maybe we would let us do the near term first, and I will come to the medium term prospects in a bit. In the near term, my worry would really be that exports are plateauing for exactly the reason we discussed, that destination countries are slowing. So if you looked at the July, August, September export numbers of India, they're all around that 33, 35 billion. We're not able to progress beyond that. Likewise, consumption within India at the lower echelons is not very good. That's why there are doubts over the 7%. But why do you think we can still overcome?
Right. So first of all, on exports, there has also been the fact that the currencies of the other countries have depreciated more than India's currency. Yes. So that's something that India can do something about. We should allow rupee to depreciate at least as much as the competing countries have let it depreciate. But export is only one of the components of the aggregate demand, and the way I see it is a little differently. So take the first quarter of 22-23, we have already had 13.5% growth rate, and now in rough sense, if you do this calculation. What we need is the growth rates of the 4 quarters to add up to about 32, right? And divided by 4 gives you about 8%. So 13.5 out of the 32 percentage points has already happened. Question is that in the remaining 3 quarters, can we now, feel something like 21.5% additional growth? That growth rates. Well, if you look at the second quarter, the base we are starting off with is still relatively quite low. Last year, the GDP in the second quarter, that is in the year 21-22, was only 1.5% above the 2019-20 second quarter. So, pre-COVID, we have hardly, recovered to the pre-COVID level.
That's
so it's still a very low level of GDP with which we are working in the second quarter. And so my kind of inference is that if I also look additionally at all the indicators that are coming out, export is one, which is a little tepid, but all the other indicators, if you look at, tax collection, flights, how the airline industry is doing, how the transportation industry is doing, particularly the passenger transport and all. They're all, high frequency indicators by and large are showing pretty robust growth. And so I think given the low level of the base and generally positive indicators, whatever we have so far for the second quarter, suggests to me that 7 to 8% growth during this second quarter is entirely feasible. with that, we are left with doing another 5.5 to 6% in each of these remaining quarters. So that gets us to almost 8%. So I'm pitching for 8. So
Okay.
7 certainly we will cross.
Okay.
So
Well,
it's purely arithmetic.
Yes.
Also, by the way, if you look at the sectors, one large sector, transportation, hotel, broadcasting, etc., that is still about more than 11% below the pre-COVID
yes.
level. Likewise, you got construction, very large sector, which has come to only about 3.5% above the pre-COVID level.
That's right.
Mining, quarrying, electricity, power, all these sectors, they are all below, all about, less than 3.5% more than the pre-COVID level.
Yeah.
So enormous scope for catch up. So with all that, it seems to me that, in the remaining 3 quarters, we can certainly get growth rates of these 3 quarters adding up to something like 21.5%, which will get us to 8%.
Okay, well, that's music to our ears. We do hope it pans out that way. At the moment, the RBI's forecast for the second half stands at only 4.6%. There are some fears. I'll do one thing, sir. Let's take a break on the optimistic note and come back with what the skeptics worry about. Back in a minute.